Hey folks, welcome back to Whiteboard Invest Crypto News. Today, we're diving into some highlighted crypto news about Cardano Skyrockets. 28% in volume, the stablecoin working group has been officially funded to research and negotiate bringing USDC and other stablecoins to Cardano and Shiba Inu's Shibarium Skyrockets 3,436% in new accounts in 24 hours. Oh, and just a friendly reminder, we put a lot of effort into our daily research to save you from the hassle of collecting and sifting through market news. So, stick around till the end to stay informed and sharpen your research skills. Let's jump into the details right away. Alright, the very first one, we're having some exciting news about Cardano, ADA, and its recent surge in trading volume. So, I just read this fascinating piece on You Today about Cardano's trading volume exploding by 28% in just 24 hours. Yeah, you heard that right, 28%. This spike has primarily been in derivatives trading, which is super interesting. According to CoinGlass, the volume of perpetual futures on Cardano hit a whopping 362.30 million. And when we combine that with spot trading, the total volume was around $668 million. That's huge. Now let's break this down. The fact that most of this volume increase is in the derivatives market tells us a lot. Unlike the spot market, which actually saw a slight decrease, derivatives are more about speculation. Traders are betting on ADA's future price movements rather than buying and holding the token. This kind of speculative activity can drive prices up quickly, but it can also be volatile. Looking at ADA's price action, it climbed today and hit a key resistance level at 0.46. This has been a tough nut to crack for Cardano. It's like this psychological barrier that ADA just can't seem to get past. And there's been some lighthearted banter in the community calling ADA a stablecoin stuck at Re45 eyes. Funny, but it does highlight the frustration some investors are feeling. Now, why is this Re46 level so important? Breaking through this resistance could signal a significant bullish trend. If buyers manage to push the price above this mark, it could lead to a strong rally. We might see all those jokes disappear pretty quickly if ADA breaks out above 0.46 and stays there. From my perspective, this is a crucial moment for Cardano. If you're holding ADA or considering jumping in, keep an eye on that resistance level. The next few days or weeks could be very telling. If ADA breaks through and sustains a higher price, it could be a great opportunity. But remember, the increased trading volume in derivatives also means there's a lot of speculation, which can lead to increased volatility. So, what's my take? Cardano is definitely one to watch right now. The surge in trading volume and the looming price breakout could offer some exciting opportunities, but it's essential to stay cautious. Furthermore, we've also got some exciting news to discuss about Cardano and its latest move towards integrating stablecoins like USDC. This is a big deal indeed. So I just read this really interesting update from a working group funded by Intersect. They've officially received funding to research bringing USDC and other stablecoins to Cardano. Now, if you're into crypto, you know how huge USDC and USDT are. They're not going anywhere, and they play a crucial role in the market. The goal of this research is to gather data that will help in negotiations with stablecoin providers like Circle. This isn't just about hoping USDC will come to Cardano, it's about setting up a solid framework for those negotiations. We're talking about improving our pitch to Circle, showcasing the benefits for them, and making it a win-win-win situation. A win for the users, a win for Cardano, and a win for Circle. Why is this so important? Well, let's be real. USDC has a lot of leverage right now. Everyone wants them on their network. By funding this research, Cardano is positioning itself to offer something valuable to Circle. This little investment in research could save us massive amounts on integration costs and really show what Cardano can bring to the table. Now, the Cardano community is super active and passionate. If we approach stablecoin providers with no data, they'll likely charge us exorbitant fees for integration. But if we can prove that they will benefit from integrating with Cardano, it will be cheaper and quicker. This research could save the community millions of dollars, and it's set to start bringing massive liquidity to the Cardano ecosystem. The team behind this research is impressive. It's made up of founders, individuals from founding entities, and people who have negotiated with large stablecoin providers before. This isn't just a group of random people. These are experienced professionals who know what they're doing. I love seeing this kind of grassroots effort. It shows the passion and dedication within the Cardano community. This initiative isn't just about making noise, it's about bringing real value and showing that Cardano can offer something unique to stablecoin providers like Circle. Now, if you're a founder of a large project, keep an eye on your DMs and emails because the team might be reaching out to you for support. And remember, this is just the beginning. Integrating USDC into Cardano won't happen overnight, but this is a crucial step in the right direction. So, what's my take on all this? I think it's fantastic progress. Cardano is showing that it's proactive and strategic in its approach to growth. This research and the resulting negotiations could bring substantial benefits to the network. It's about playing the long game and ensuring that when stablecoins do come to Cardano, it's done in the best way possible for everyone involved. Next, let's talk about the poll that got everyone talking. Rick McCracken-Digi, a prominent member of the Cardano community, ran a poll on X, you might know it as Twitter, asking the ADA community how they'd prefer to sustain Cardano's future security. The options were pretty interesting. One was a 2% inflation of ADA rewards, similar to what we see with Ethereum, Dogecoin, and Solana. The other option was using 20% of the inflation-generated revenue from staking other or partner chains. Now, the results were quite mixed. Only 20% of respondents favored the first option, while 35.3% preferred the second. But the real kicker? A whopping 44.8% of respondents were undecided, choosing the show results option instead. This tells us there's a lot of uncertainty and curiosity about the best way forward. Enter Charles Hoskinson, the man himself. In reaction to the poll, he pointed out a compelling statistic from the Bitcoin network. Did you know that 75% of the revenue generated from mining Bitcoin blocks comes from transaction fees, not block inflation? That's huge. Hoskinson suggests that Cardano could follow a similar path. With millions of transactions expected on the network, these transaction fees could fund the block producers, ensuring security and sustainability without relying heavily on block rewards. This is a big deal because it aligns with a broader trend we're seeing in the crypto world. More and more, the focus is shifting towards transaction fee-based revenue models. Why? Because they're seen as more sustainable in the long run. Relying on block rewards alone can be risky and may not scale well as networks grow. McCracken agreed with Hoskinson's perspective, but also pointed out a crucial factor: throughput and the number of users. For this transaction fee model to work, Cardano needs a high volume of transactions and a robust user base. This means continued growth and adoption are key. So, what's my take on all this? I think Hoskinson's insight is spot on. Moving towards a transaction fee-based model makes a lot of sense for Cardano's future. It's a sustainable way to ensure network security and aligns well with the long-term vision for the blockchain. But it's not without challenges. We need to see Cardano continue to scale, attract more users, and increase transaction volume. Oh, by the way, the content in our video should not be considered investment advice, just for entertainment only. Investing is speculative. When investing, your capital is at risk. Before we dive into today's next market-breaking news, make sure you hit the like button and subscribe to our channel to fuel us up for even hotter content than ever. Back to the hottest news. We're diving into some pretty exciting news about Shiba Inu's blockchain platform, Shibarium. We've seen an astonishing 3,436% jump in new accounts on Shibarium in just 24 hours. That's right, 3,436%. So, according to data from Shibarium Scan, The number of new accounts on Shibarium skyrocketed from 30 to 1,031 overnight. This is a massive increase, and it's clear that user engagement on the network has surged significantly. And it doesn't stop there. The transaction volume on Shibarium also saw a big boost, jumping from 4,651 to 8,527 transactions. That's an 80% increase in transaction activity over the same period. Impressive, right? Now, what's driving this sudden pump in activity? It's an open question, but one likely factor is the recent rise in the price of SHIB, Shiba Inu's token. Since the opening of a new daily candle on its chart, SHIB has been climbing, nearly 5% up. Typically, increased network activity can be a precursor to price movements in related tokens, but in this case, it seems like the price momentum of SHIB might be spurring more activity on Shibarium. One interesting point to note is that all this transaction activity seems to be driven by new users. The active accounts for the period in question grew by 1,243 per day. This suggests that fresh blood is coming into the network, which is always a good sign for any blockchain platform. So, what does this mean for Shibarium and Shiba Inu going forward? Well, this could be a sign of a new phase of growth for the platform. Increased user engagement and transaction volume are positive indicators that more people are finding value in Shibarium. However, it's still early days. We need to watch the next few days or weeks to see if this trend is sustainable or if it's just a temporary spike. In my opinion, this kind of growth can be very promising. It shows that there is increasing interest and adoption of the platform, which can drive further innovation and development. But, as always, it's important to stay cautious and not get carried away by the hype. We need to see if this level of activity can be maintained and whether it translates into long-term growth and stability for the network.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.